Hello and welcome to the Cryptocurrency News channel. Well, the executive order came out today, and yes, it really wasn't much. It was probably more positive than negative, and people were just making a big hoopla about it for no apparent reason. The executive order did not actually take a stance on crypto, at least not from the White House. In fact, we have the exact executive order right here. It's kind of long, honestly. We might go over it during the entirety of it during the stream. I'm not really going to read it right now, but we'll go over the basics of the executive order. It has a couple of points, but I think it's actually more positive for the sector than negative. Unless you don't want any regulation of crypto, which wasn't going to happen anyways, crypto was never really going to go mainstream without any real regulation of it. So the takeaway today, this is from CoinDesk, U.S. President Joe Biden signed a first-of-its-kind executive order on cryptocurrencies on Wednesday, directing federal agencies to coordinate their approach to the sector. It doesn't really have any specific instructions that the White House administration actually takes because Joe Biden is just wanting more information. So one part of the order that I think people were bullish on was it actually instructed Treasury Department to create a report of the future of money, including how the current financial system might not meet consumer needs. So they want innovation in crypto to spur to meet consumer needs in the U.S. So the U.S. may take a more active approach to developing blockchain technology and cryptocurrencies. It says nothing about banning cryptocurrencies. U.S. President Joe Biden directed federal agencies to coordinate their efforts at drafting cryptocurrency regulations in a first-of-a-kind executive order on Wednesday. So basically, he wants the SEC, the CFTC, the Treasury, and FinCEN and all these departments to stop bickering with each other and actually draft legislation. The whole of government effort to regulate crypto industry focuses on consumer protection, financial stability, illicit uses, leadership in global financial sector, financial inclusion, and responsible innovation. That's perfectly fine, according to a fact sheet accompanying the order. So that's perfectly fine. There's nothing wrong with that. He wants to clamp down on illicit uses and wants to promote financial stability and consumer protection. These are things that they've been saying for years, and of course, these things will actually be in there. This is the first executive order to focus exclusively on the growing digital sector, which means he's actually acknowledging it, and he's not saying that it's garbage. Similarly, the order did not announce any new regulations for which cryptocurrencies companies do abide. So there are no new strict regulations like, no, you can't do this, or no, you can't do that. Nothing that says, no, DeFi is illegal, or stablecoins are illegal, or anything. Although the gist of this order does focus a lot on stablecoins. A senior administration official struck a neutral tone, not a bad tone, a neutral tone on digital assets by telling reporters the growth of the cryptocurrency sector could threaten the U.S. financial system, national security, or business stability. But they basically want sufficient oversight. They don't want to ban anything. So there is basically no chance of a crypto ban in the United States. They want oversight. And that was always going to happen. Criminals can use cryptocurrencies to launder funds. However, he did say at the same time that digital assets can provide opportunities for American innovation and competitiveness. They see what's actually going on in Europe. They see what's going on in Asia, outside of China, obviously, which has banned cryptocurrencies. And the U.S. is not taking the same position as China. They think innovation is central to America's story and our economy, and they want to create and help build new jobs. High-paying jobs at that. They see many states are actually doing like crypto, either crypto mining or crypto development, and they want regulations that are actually friendly to this developing sector. So Wednesday's executive order, which was originally reported to be in the works in October 2021, so it's been a while, and it will define 6 priorities, which obviously means protecting global financial stability. That's something they always want to do, preventing illicit uses, especially in terms of the Russian sanctions now. Responsible innovation, which means they want to develop new things, financial inclusion, getting everyone in, and U.S. leadership. Obviously, the U.S. leadership part is basically wanting to peg everything to USDC. That's basically what I'm getting on that. Roughly 40 million Americans, or 16% of the total U.S. population, have reportedly invested in or are trading in cryptocurrencies. I think the ones that are actually really into trading is much, much less than that. But maybe like 1 in 8 or 1 in 7 have actually looked at cryptocurrencies or are considering investing in cryptocurrencies. Crypto's volatility was cited as one issue that could harm investors by an administration official. Obviously, it's still a new market. It's still very, very volatile. So, like at the beginning of the COVID pandemic, it was around $10,300, and now it peaked close to $70,000 in November before falling in 2021 and start of 2022. So essentially, this actually surged $3,000 on Tuesday after a Treasury Department statement on the executive order was seemingly inadvertently published. I don't know if they leaked it on purpose or what. It doesn't really matter. I think people were a little bit afraid of this executive order being bad for crypto, especially in light of the Russian sanctions and rumors, which are untrue, of people using these cryptos to actually circumvent Russian sanctions, which is not true at all. And when this executive order came out, and it was basically a nothing burger or even positive towards crypto, in my opinion, realistically, I think people's fears went away and it actually went up. Hopefully, they just won't sell the news because this only came up yesterday. I don't see any reason why they would sell this news because it's actually quite good. They recognize the potential benefits of digital assets and also risks, and they have to do an assessment. So part of the order calls the U.S. Treasury Department to draft a report on the future of money and payment systems to see how that will actually go out. My guess is that's going to center around USDC and stablecoins. The interagency report will analyze cryptocurrency's impact on economic and financial growth, financial inclusion, national security, and the extent to which technological innovation may influence our future. So, already, the department has worked with the President's Working Group on Financial Markets to study one particular kind of asset, digital asset, stablecoins. So the main regulation coming in the future is going to actually focus on stablecoins, specifically things that are completely one-to-one pegged to the USD, like USDC. It would actually be in the US's favor to promote a stablecoin for worldwide trade and use that does actually focus on USDC. So that actually might be eventually the cryptocurrency of trade. So that's actually pretty cool. They're also looking at the digital dollar. That's going to be quite a while away, but I do think it's going to focus so much on USDC and stablecoins, especially ones pegged to the US dollar, and they're also calling for international cooperation. So I actually see this as more bullish than bearish for the industry, and I think some of people's fears have been alleviated that it was going to be very bearish for the industry. So that's what I have to say for today. We'll go over this more in depth in my stream that's coming up in probably a couple of minutes. Like and subscribe, hit that bell notifications button, and I will see you guys later.